Jared Kushner is part of the consortium led by Paramount, which has launched a hostile takeover attempt for Warner Brothers Discovery. Sovereign wealth funds from Saudi, Qatar and Abu Dhabi are also funding Paramount. The Warner Brothers board have agreed to sell the company to Netflix for $72 billion. Well, those are the headlines we've been tracking for you this evening on What's Brewing Today. Beauty and personal care brand Foxtail is entering a new chapter. From a breakout D2C skincare brand, it is now evolving into a house of brands with an annual recurring revenue of over 700 crore rupees in GMV. Its next big bet is body care. Foxtail has launched Hula Hoop by Foxtail, a science-first, clinically backed body care line aimed at a fast-growing but underserved category. This marks a strategic shift as Foxtail extends its formulation expertise beyond skincare and double downs on a 250% growth trajectory with a clear push towards profitability. To decode the launch, the scale-up and the roadmap to building a beauty powerhouse, I'm joined by Romita Mazumdar, the founder and CEO of Foxtail. Romita, welcome back to Startup Street. Foxtail has crossed the 700 crore rupee GMV mark and is now evolving into a house of brands. What's driving this shift beyond skincare, and what gap in the market led you to launch Hula Hoop by Foxtail?
The shift is really the backbone that we built in R&D. We started our R&D lab 6 years back, and we've been developing a lot of products and largely focused on dermal delivery of products. And with understanding that and tracking that for the skin on your face, it was an easy extension to do on body care. And Hula Hoop came about really with the intent to build serious science for body care, because there are a lot of problem statements like hyperpigmentation, tanning on body as well. But at the same time, to bring back some fun, because we really believe as a brand in self-care and having a good time there. So yeah, it was a mix of these things that brought about Hula Hoop.
All right. So like you mentioned, Hula Hoop debuts with derm-grade solutions for concerns like body acne, pigmentation and keratosis pilaris. How many products, Romita, do you currently have in the body care line, and how are they priced? Walk us through the range.
So we have largely three ranges right now, Shruti. One is a very very good and gentle exfoliating range, which is something that is made with the base of salicylic acid, and it's good for people who have back acne, KP, strawberry skin, etc. The second range is focused on brightening, and the main impact of it is it doesn't let tan settle, and we've made it in a very hydrating fashion so that you can use it consistently every day. And the third range is focused on ultra nourishing. A lot of people in India, including myself, we have extremely dry skin. And this is something that, along with ceramides and a lot of hydrating agents, work on flaky skin that turns white and is very, very dry. So these are three main skin concerns that we are solving currently. Prices are between 300 to 400, so very reasonable. Our scrub is around the 500 rupees range, but the intent is to be masstige and be able to serve most of India. Yeah.
Sure. Romita, you claim Hula Hoop blends clinical actives with a playful, dopamine-rich brand world. How do you balance high science with high spirits without diluting efficacy? And as Foxtail expands across categories, what's the real moat? Formulation IP, brand death, or something else?
See, our real IP is always going to be formulation depth, because our only reason that we win in the market is consumers keep coming back to us. And while the consumers may buy us for different reasons, the only measurement of coming back becomes the product itself. So product IP is our only long-term moat that we build. And how we manage the two is also very formulation-led. A lot of our formulations have a strong actives and very strong hydration base, so that it gives that impact of hydration, being gentle and solve problems for you. But at the same time, we play a lot with allergen-free fragrances. In fact, the fragrance that we have in body care are not just allergen-free, they're performance-led. They work on the bacteria causing odor, which is very common in Indian skin type and generally in Indian physiology, and gives fragrance that can last up to 8-9 hours, so that you don't have to do multi-steps of deodorants and perfumes, etc. So I think dopamine and efficacy, they are not really a paradox in the Foxtail world of R&D. It goes hand in hand, and we try to make sure that we balance it during the development process.
Sure. Robita, Foxtail has clocked 250% year-on-year growth with a 50% repeat rate on D2C. What's fueling this momentum, and also with profitability projected next year? Which levers, distribution, product mix, operational efficiencies are, moving the needle fastest, and what's the revenue mix you see going forward?
So our profitability biggest drive is just coming from further market penetration. The entire growth is flowing into profitability, which has always been the key way that we wanted to build a consumer brand. That once we launch a brand and put a PMF in place, we invest in the brand and give it. If the brand has organic pull, after we reach a certain scale, the brand's organic pull ends up driving the lifetime value on the products, and at the same time, the repeat rate accelerates the LTV that we get, and that's how we balance the LTV to CAC ratio, which honestly is the biggest ratio that ends up determining the scale of profitability and the speed to profitability. And that's really the way and the leverage that is coming in. So I would say both product, marketing efficiency, and further operating leverage is driving that profitability for us. And growth is being driven by just further market penetration. We are a limited SKU company. We only have 20 SKUs, so we don't launch a lot of products at the same time. But we've moved not just from tier one market, we are seeing massive growth in tier two and three markets. And that's been a big unlock for us over the last year. And we are excited to keep building in that direction.
Sure. All right. One final question before I let you go. With Hula Hoop as the first step in the House of Brands journey, what does the next 12 to 18 months look like, Romita? How many brands do you see Foxtail eventually housing?
We will be launching one more brand, Shruti, in the next 12 to 18 months. You should see that happen sooner than later. And like I said, we are limited SKU, high focus on each SKU. So now with 3 brands, it honestly feels like a lot already for us. So the focus is just going to be getting the GTMs of both these new brands right, getting it to 100 crores in the first year of launch. And that's what we did with Foxtail. We want to repeat that. And hopefully with much lesser capital investment, because there's an operational infrastructure in place already and a lot of learnings both on the user side as well as on the marketing side. So yeah, that's our focus for the next 12 to 18 months.
All right. So a new brand can be expected within the next 12 to 18 months under the House of Brands. Thank you so much, Romita, for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you, Shruti. Nice speaking with you. Thank you.
And on the investor eye, Center Court Capital closes its maiden fund at 410 crore rupees, well above its original target. The oversubscription signals strong investor confidence in India's rapidly expanding sports, fitness, wellness and social gaming economy. Backed by institutional investors, family offices, top athletes and leading entrepreneurs, the fund plans to bet big on founders building the next generation of performance analytics and digital gaming companies. Joining me now to decode the opportunity is Mustafa Gose, the founder of Center Court Capital. Mustafa, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on closing the fund above the target that you'd set for yourself, right? At 410 crore rupees. Take us through the kind of belief investors had in the fund and the India opportunity for sports tech.
Well, thank you. It's lovely to be here and be an opportunity to talk about this. Yeah, very, very happy with where we are. We obviously set out with a goal of looking to raise 350 crores in our first fund. Beating our expectations and crossing even 400 crores is a huge achievement. For us, it bodes well with the thesis that we're looking to build out. I think the general consensus is that our core sectors of sports, fitness, wellness, and then going on into social gaming are very integral in the growth of the Indian ecosystem and in the Indian market right now. Investors, family offices are seeing this. It's something that we are all experiencing on a day-to-day basis around us, with the way importance is being given to health, wellness, outdoor activities. And that's the core thesis of the fund, which we look to build out over the next 12 to 24 months.
Sure, something you're building out over the next 12 to 24 months. But, industry estimates show India's sports economy could double to nearly $40 billion by 2030, right? Which specific subsectors do you see driving the strongest growth within that opportunity?
No, absolutely. And I think whether you look at it from a bottom-up perspective of just the general consumer behavior towards sport, wellness, nutrition, health, recovery, or from a top-down perspective, we're hosting the Commonwealth Games in 2030. We have very strong ambitions as a country to host the 36th Olympic Games. These are all very large statements and ambitions that we have set forth for ourselves. And all aspects that feed into this are going to be integral, whether you talk about infrastructure requirements, whether you talk about the need for technology across player development, analytics, data science, and then you go on to even just the consumer requirements of nutrition, recovery, pain management, etc. So these are all very, very large opportunities which are absolutely untapped in the Indian market. And that's what we're looking to unlock.
Absolutely, because the sports tech sector in India is actually at a very nascent stage, and there's so many opportunities to sort of see out here, right? You've already invested in 6 companies so far. What common themes or differentiators made these founders stand out for your first set of bets, and which are these companies?
No, absolutely, we have, and I think they've all of them are building in very unique spaces. Whether it is our first investment, which was in the broadcast technology space, which is catering to live broadcast and how we can enhance viewership experiences. Whether you're watching live sport, initially cricket on your phone or on a device or on screen. So these are actually plays which are very relevant and have scaled extremely well internationally. They're just starting to build their presence in the Indian market, and quality founders are looking to adopt some of those learnings and build for India. And opportunities like that are what we're looking to really tap into and see with our own operating backgrounds and experiences how we can help them scale up and capture the opportunity at large.
Sure. And you have these initial ticket sizes between 8 crore and 20 crore rupees, right? What type of companies and business models are the highest priority for your next phase of deployment, and how soon will we see you deploy these funds?
Yeah, so I mean, while the focus of the fund is looking at seed to Series A investments, broadly, all the investments we've done so far have been more on a Series A stage, where product has been built out or platforms are already in place, and they're now going into revenue generating more growth and expansion. That's broadly where we've looked at the moment. We will look at early opportunities as well. But I think the broad focus will be from a seed to Series A. Like you said, we've started investing. We have 6 companies in the portfolio. Plan is to get anywhere between 15 to 18 over the next couple of years, and really go from there.
Sure. And with your maiden fund closing at 410 crore rupees, overshooting your original target, how are you sort of thinking about deploying this AUM for long-term value creation, and what kind of growth and return benchmarks are you sort of setting out for the portfolio, considering all these companies are at their nascent stages?
No, absolutely. And I think the important factor is that, in the aspects that we're focused on, we believe that India is still at the ground floor level. We have a huge upside and we have a lot to unlock. And from our perspective, the next 6-7 years, we're going to see massive changes in the industry and in the market. And that will allow for our portfolio companies and many, many more to scale up and really, really grow. We also have a lot of opportunities that are very relevant for international markets, and with the price benefits and arbitrage that we have building out of India, can be really disruptive when they enter international markets. So that's something that we always have an eye on.
Sure. And apart from just the capital, right, how do you sort of plan to support these portfolio companies beyond capital, especially, Indian sports and gaming products increasingly targeting global audiences?
Yeah, I mean, I think we have a bit of an advantage here. We come from operating backgrounds, having been in the sports industry for probably way too long. I think the focus is about how we can add value with helping founders, considering these are all very early stage investments, and we've been able to kind of demonstrate that already, whether it is finding ways to enter international markets or penetrate deeper into the Indian market, depending on their respective businesses. So we will look to be a fund that's a lot more hands-on. After all, we are operator turned investors, so look to bring that to the table.
Absolutely, being more hands-on apart from just the capital. All right, Mustafa, thank you so much for taking time out and being here with us on Startup Street.
Oh, lovely. Thank you for talking to me.
On that note, it is time for us to slip into a short break. But coming up next, Dream 11 makes a bold move, stepping into a full-fledged second-screen sports entertainment ecosystem. Co-founder and CEO Harsh Jain joins us to share more on the company's future plans. Stay tuned.
26 years of CNBC TV18.
Welcome back to Startup Street. Dream 11 hits refresh. The flagship brand of Dream Sports is making a bold pivot from gaming to a full-fledged second-screen sports entertainment ecosystem. With 250 million users, the new Dream 11 aims to reshape how fans watch sports. Creator-led live match watch-alongs, real-time banter, snackable highlights, and free-to-play fantasy, all designed to boost engagement alongside live broadcasts. It's a global rollout and a strategic shift that positions Dream 11 not just as a fantasy platform, but as a sports-first social entertainment destination. To unpack the pivot, the opportunity, and the roadmap ahead, I'm joined by Harsh Jain, the co-founder and CEO of Dream 11 and Dream Sports. Harsh, welcome to Startup Street. Now, Dream 11 is transforming into a global second-screen sports entertainment platform. What triggered this strategic shift beyond gaming, and what gap did you see in the market that convinced you this was the next big frontier?
Yeah, thanks for having me. When after the real money gaming ban happened in India, obviously we were looking at pivoting to what else we could solve. We wanted to look for other startup problems that we could approach within the sports ecosystem. And we wanted to stay true to our mission of making every sport, every match more exciting. And so keeping that constraint, we said that the new generation is entirely focused on watching matches on their phone or on their TV at home. Gone is the time where we used to meet and watch every sports match together with our friends at a friend's house or at a club or at a external venue. But now everyone was watching it alone at home, and we wanted to solve that problem to make sure that people can watch these matches together. So if they can't watch it physically together, we wanted to make sure they can watch it virtually together. And that's where we stumbled upon the whole concept of watch-alongs. And that's what we've launched today. We want to empower users with the ability to watch the match as a second screen experience with friends or creators on Dream 11.
Sure. So you're now talking about, creator-led live match watch-alongs, real-time fan banter, and snackable sport moments. How do you expect these features to change the way fans consume live sport? And as Dream 11 increasingly competes with broadcasters, streamers, and social sport, platforms, what will be your sharpest differentiation?
I think the whole point is to be a second screen experience. We've always been a second screen experience. Dream 11, even with fantasy sports, only enhanced the broadcast and got more people to watch more sports than ever before. We want to stick to that, but we want to go from a broadcaster's friend to a broadcaster's best friend. We believe that watch-alongs will help users increase broadcast viewership significantly, because there are always parts of the match which are not as interesting as the key moments of a match. And at those points, you want more active engagement, which can be obtained with watch-alongs by watching creators. We also know that the new generation wants more raw, unfiltered commentary and active engagement with the match. And that's what we can provide as a third-party platform. So we are not here to compete with broadcasters, but actually to complement them.
All right. Now, with over 250 million users globally, Dream 11 already has scale. So how are you tailoring this new platform for different markets across geographies? What are the challenges and opportunities in taking a made-in-India sports entertainment product global?
Well, that's a great question. I think that we have 250 million users, but that very strength is also a weakness in the global markets where we have to start from scratch. We've always been a made in India, for India, by Indians company. And now with the Real Money Gaming app, we are still made in India by Indians, but for the world. So we still launch with our Indian market, but we do want to have global aspirations for watch-alongs, where we can solve for sports fans globally. And so in India, while we have these 250 million users, in every other country, we're going to start from zero. But we hope that these Indian users will provide a big solution to a cold start problem, even for international users. But we will have to solve for personalization and localization in every country we launch.
Sure. Okay, now this pivot places creators at the center. So co-watching, reacting and engaging with fans in real time. What's Dream 11's strategy to build and support a strong creator ecosystem? How do you plan to monetize this second screen model? Ads, premium features, commerce, what is it?
Yeah, well, you got it right on the nail. We've launched with a whole bunch of creators to ensure quality and curate them. But we do want to be a platform soon, and so we will keep evolving towards being a more open platform like YouTube, where any creator can come and join in and grow their user base and get access to our entire 250 million user base. And this is exactly on the lines of what our Honorable Prime Minister has advocated for us to grow the creator ecosystem. And that can be a huge strength for India, not just internally, but even for the world. And
Okay.
the creators will monetize via ads and premium products that we have kept. We have Dream Bucks, which is a virtual currency on our platform that users can buy and burn to engage with creators in different ways. And this is a tried and tested model with Twitch, with YouTube, all over the world. And so we're doing this now only for sports.
Okay, so how soon do you expect this pivot to significantly contribute to Dream Sports' bottom line? Is there a target?
I think our goal has always been to take care of people who will create great products, who will then create great profits. So I think we're in that products phase right now.
Sure.
We have a great team. We are hoping to create a new category in India and a great product worldwide.
Okay.
And if that goes well, I'm sure we can contribute heavily, but there's no plans for exactly what number and by when.
All right. Now, Harsh, 2025 has seen heightened global scrutiny of fantasy sports, digital gaming and sports content platforms. How prepared is Dream 11 to navigate regulatory headwinds across markets and, have compliance or licensing considerations influenced your pivot strategy?
I think just like India, we'll always be a company that abides by the law, both in letter and in spirit. And that's what we've done even after the real money gaming ban. Instead of going out in court and challenging it, we've gone internally and focused on a pivot. And now we've launched as a second screen sports entertainment app. We'll do the same thing internationally. In every country we launch, we will make sure that we abide by those laws and have the highest levels of corporate governance.
Sure. Finally, Harsh, if Dream 11's launch of a second screen entertainment platform is just the beginning, where do you see Dream Sports in the next 3 to 5 years? Will you expand into original content, long-form sports shows, or perhaps deeper integrations with leagues and broadcasters? What's the end game?
I think if you look at 3 years ago, nobody knew that something like AI would be there in our lives today. So I think the technology world, the world of tech changes so quickly that anyone planning for what they're going to be 3 to 5 years later is at best a guesstimate. So I think today, as a startup and as any startup should, we are focused on the here and now. I think all our plans are focused on the Cricket World Cup, the IPL and the Football World Cup that's coming up in the next 6 months.
Okay.
And after that, maybe I'll have a better answer for you.
All right. We'll surely keep a track of that. Harsh, many thanks for joining us on Startup Street and wish you the very best with this bold pivot. Thank you.
Thank you so much.
And with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
"26 years of CNBC TV18.